Hi everyone, Donna, the accounting lady here. I'm going to talk a little bit today about top 10 bookkeeping mistakes that are costing your business money. If you find these videos helpful, entertaining, if you like them at all, please like, share, subscribe, and comment below. I would love to hear from you. I really do read all the comments. I had one where I actually made a video in response to the comment. I don't know if the gentleman that left the comment has responded to that. That was over on YouTube. Or if he has seen it. It's not, I honestly felt like he was being kind of condescending to me, So anyway, that's up on YouTube. Let's go with it. Number one, Utah is so bad about this. Number one accounting mistake you can make in your small business is to do it yourself. Seriously, do not try to do this all yourself. It is a ton of work. Even for a small business, it's a ton of work. Because I have done this for so many years, I am very, very good at it, and so I can do it very quickly. If you're spending your time trying to Google, how to come up with, how to record a bad check in QuickBooks, it's actually kind of an involved process. This is just an example. But because I do this all the time, I can do it like that. I can do it in a fraction of the time it's going to take you. So in fact, even when I first moved to Utah, a lot of this is because of my work ethic. When I first moved to Utah in, is it 99? One of the first jobs that I had was working for a little candle company, and they had a lot of accounts that they considered uncollectible. They had let this sit off, for a long time. Anyway, they thought this was a 40-hour-a-week job. Within 6 weeks, I had worked myself out of a job, and I was actually wandering around going, well, what do you guys want me to do next? Because I'm out of things to do. And so I ended up losing my job. I guess I should have just held the chair down. But so don't try to do it all yourself. Let the experts handle that. I am an expert at bookkeeping. And if you are not a business that really fits in my model, I have referral partners that I know will do an amazing job for you, and I know what their pricing is, so there's not going to be any surprises. Number two, always going the cheapest route. This is related to number one. I have heard this referred to as stepping over pennies to get to dollars. A stitch in time saves nine. If you spend a little bit of money on your business at the get-go, even when you're thinking, I don't have the money to spend. This is really where the rubber meets the road. Is this a business or a hobby, for one thing? If it's a business, then you need to spend the money that it takes to run a business. And one of those things is to hire a bookkeeper. You don't necessarily want the cheapest one available. You want one that's going to give you a really good bang for your buck, and they should be able to tell you what's included in what you're paying for. I have seen so many clients who've really been hurt by, just really trying to go cheap. I do offer $24.95 a week pricing. However, I will sit down with my clients and say, this is what's included in that, and your business does not fit that. This may be a $100 a week job that, it's going to require that much of my time, and if you're trying to talk me down to $24.95 when it's a much bigger job than that, you're going to be hurt, and I'm not going to take you as a client. I mean, this is the way it is. One of the reasons for this is that in order to get a really good bookkeeper, they need to be up on the latest laws. They need to be up on, they don't have to be up on all the latest tax laws, but they do need to be aware of what's going on in the business. And so I'm in the process of getting my accounting degree, and my prices are going to skyrocket as soon as that is completed, especially once I get my MBA. So just kind of brace yourselves. If you're one of my clients, if you're not one of my clients, you probably need to get in now and lock in your pricing, because when I get my degree, that's going to change everything. I'm already finding a lot of ways in which I can increase value for my customers. So you don't ever want to go your cheapest route. You don't want to go your cheapest route on your bookkeeper. You don't want to go the cheapest route on anything, actually. It's a marketing tool, in fact. A lot of businesses will come in with a loss leader. They will say something, kind of outrageous, like bookkeeping, $24.95 a week. And really what they're trying to do is get you in the door. And then they'll offer you packages. I've seen this in tanning salons. I've seen it for gym memberships. I've seen it in the bookkeeping business. I've seen it over and over again. You don't ever want to go the cheapest route, and you usually don't want to go the most expensive route. So whether it's office furniture, whether it's services, oh my gosh, I remember trying to go the cheap route with my hair one time, and I got what I paid for, which was fried hair. No, it's not this hair. This was years ago, and I was struggling. And in fact, I think it was in the late 80s. And I had used box color, and so I decided to go the cheap route, right? Don't do it yourself, and don't cheap yourself out. And I ended up with the most horrible shade of orange hair. Because one, I got the box color, I was going to try to go red. I'm a natural strawberry blonde. It's my actual natural color. And I thought I'd be able to do this with a box. You can't do this with box color. So I then ended up going to a salon, so I ended up having to pay for the box color, and I had to pay for the salon time. And because I went to a cheap salon and still trying to be thrifty, I still ended up with some bizarre brassy orange hair, and learned my lesson. I have always had my hair colored at a salon if I wanted it colored, and I'm kind of hitting the age where it's kind of a requirement. That's why you don't cheap out. You don't want the cheapest route. You want to try to find the best value, and that's not necessarily the cheapest route. The best value for me in that time would actually have been to spend $150 and get my hair done the way I wanted it done. And I hope all of my friends who are hairdressers are like, yay, Donna understands. Because really, you don't want to cheap out. You don't want to be so cheap that you're actually costing yourself more money in the long run. And this really applies to everything. Number 3, failing to negotiate vendor terms. A lot of vendors will give you discounts if you run a trade line with them. And most small businesses actually use the same vendor month after month after month. Now, for my own personal business, my purchases, because it's a service business, I don't purchase enough to make it really worth my while. But if you have a lot of purchases, go to them, try to open a trade line, and tell them you would like 2% off if you can pay by the 10th. It's called 210 net 30. One, it helps you leverage your money so that you're holding on to it a little bit longer. And 2, if you can pay it by the 10th, you can in fact save money. And there's no problem with calling your vendors and asking them questions about, is there any way you can give me a discount? We're spending $10,000 a month with you. Can you give me a discount? Most of them will say yes. Number 4, 1, 2, 3, 4. I can count. Failing to keep track of receipts for minor purchases, especially when they aren't for cash. These little purchases add up. If you're spending $5 here for postage stamps and $10 over there for envelopes and $30 down the road for fuel, they add up pretty quickly. And if you're paying cash, number 1, you should have a petty cash fund. You should not be paying this out of your pocket. If you have a petty cash fund, I can teach you how to run it correctly rather than guessing. And one of the ways to run it correctly is to keep receipts and to have vouchers so that every penny that comes out of that fund should be accounted for. You do not want to get in a position where you're trying to write off every penny, and you should. You should write off every penny that gets you the maximum refund. And I don't care if it's a receipt for 50 cents for parking. You should still keep that receipt in case you ever have to defend it. And you want to be able to write it off. Number 5, writing off major purchases as immediate expenses. I just bought a printer for about $300-ish. I am not going to expense that. I am going to depreciate that. Because even though I've spent the money this year, I want it, you know, it's probably got a useful life of its computer stuff. So let's say 5 years. So I'm going to, well, let's just say 10 years for easy math. $300, 10 years, that's $30 a year that I am going to depreciate this over. And that's actually going to save me money in the long run. Number 6, taking charitable tax deductions. Here in Utah, this is huge because most of the people here in Utah, probably about 60 to 70% of the population, especially outside of Salt Lake City, is members of the same church. And this church teaches tithing. Pay 10% of your income, and you can decide for yourself, gross or net, to the church in the form of tithing. Plus fast offerings. Plus they have a thrift store, so if you donate to the thrift store. Plus if you donate to the Boy Scouts or the Girl Scouts. But wait, there's more, you know. And these are just the things that I can think of off the top of my head that are very popular where I happen to live. You need to make sure that your charitable deductions should be going through your personal. Individuals are allowed to write off charitable deductions. Businesses, not so much. Especially because businesses, if I give to Pleasant Grove High School, they're probably going to put up a big banner and recognize my business for giving. If I give to them as a person, as an individual, I can just write that off. If I give to them as a business, the odds are pretty good I'm going to be getting advertising or some such thing. And then it needs to be expensed to the correct category. So if you give a lot in charity, I don't want to discourage you from doing that. That's awesome. But make sure that you are deducting that on your personal taxes, not on your business taxes. So, and Uncle Sam will come after you if you're trying to put a lot of charity in your business. Failing to keep hard copies of receipts. Now, today, of course, everything's in the cloud. My suggestion would be to back up everything, to scan all of the receipts, back everything up, and make sure that you have multiple backups. You can scan it, you can save it as a PDF, you can save that PDF to the cloud, you can save it to an external hard drive. In fact, it would be great if you could do it to the cloud and have 2 external hard drives to kind of switch them out. And the reason for that, that I recommend that, is because most of the receipts that we see today are on thermal paper. That's the paper that comes out of the gas station. Most of the receipts that we see are thermal paper, and that means that if they get hot, they turn black. If they get cold, they go bleak. So you want to make sure that you're not relying on the internet. You want to make sure that you have something that you can print out if you ever need it. You do need to keep these receipts for about 7 years. In fact, I think 7 years is the law. And you want to make sure that you know what you spent your money on. It's a huge thing. I can't tell you how many times I've come back, you know, and said, especially, I can't tell you how many times with a client that wants me to do catch-up. So they haven't done, say, 2017 taxes. They need me to do their books for 2017, and I come back and say, in January 26th of 2017, you wrote this check for this amount to this person. What was it for? And they go, I can't remember back that far. This is really going to come to bite you. That's why I really push, get a bookkeeper, get on a system. I recommend a weekly system. I have partners that I work with that also, you know, they do the same thing I do. And if you will follow the system, you will come out smelling like a rose every year at tax time. And you will also know how your business is doing. Number 8, failing to accurately report sales and payroll tax. This is huge. Again, these are all huge. I keep saying this. I went to buy a membership somewhere, and the girl kept going, and this is my favorite, and this is my favorite, and this is my favorite. And I laughed, and I said, you're so cute. Everything's your favorite. You just love them all. She goes, yeah, that's why I work here. Failing to accurately report sales and payroll tax. Uncle Sam and your state taxing agency are very particular about getting their money. And if you don't accurately report them, they will find out, especially for payroll tax and sales tax. This is a huge thing. I have seen businesses go under for these two taxes. Not so much income tax, but for sales and payroll taxes, I have seen businesses actually go under because they're not accurately reporting them, they're not timely reporting them, and they are then wondering why they're in trouble. When you don't file and pay your taxes on time, whether it's to your municipality, to whether it's to your state or to the federal government, they love to find the heck out of you. So make sure you're reporting it accurately and make sure that you are filing your returns on time every time. Number 9, giving employees too much access and too little supervision. Now, I've actually seen this both ways. I have seen too much supervision where the employees feel so stifled that they can't actually run the business. And I've also seen basically, well, just whoever can have access to the till and whoever can have access to the petty cash, and we're just leaving things out. And I'm going, cash is the easiest thing in the world to steal. Don't leave this stuff out. There should be very specific internal controls that allow you to keep track of everything that's going on in your business. That doesn't mean you have to have them under your thumb. People don't like that. But it does mean that you should know what's going on in your business. You should be unafraid to train, and you should be ready to make changes to their procedures at any time. And number 10, the biggest one, not keeping current. I have had clients come to me and say, this is 2018, okay? Donna, we need you to do catch up starting in 2008. Why don't you have records? Well, we didn't think it was important, and now we're getting audited, and so now we need to figure out what we actually owe. And I'm going, you haven't kept your records in 10 years? That's going to be a pain in the neck to try to figure out 10 years later. I don't know about you, but I don't really remember what I was doing 10 years ago. I remember who I was spending time with, mostly, if it's one person in particular. But beyond that, I really couldn't tell you what I was doing on May 7th, 2008. I just don't remember back that far. So if you are not keeping current, you are setting yourself up for problems. That is it for today. This was pretty easy. It was nice not to ramble. Have a wonderful Monday, and I will talk to you again soon.